is Martin from Secrets, the channel for learning about trading and investing. Welcome to the markets tomorrow. The daily stock market analysis show where we look at what happened in the market during the day, learn something from it, and then plan for a better trade for the next day. So we had a gap up on both indices, and banking index made a new all-time high, but finally ended up indecisive, dodgy, small body candles. And we have a Fed event tomorrow and then weekly expiry on our markets as well. So let's see what exactly can we make out of it, right? So here we have the candle. It's indecisive, small body, bull bear fight happened. That's what the small body indicates. And we have a gap up which indicates bullishness in the opening of the market, and it's a continuation of the previous 2 days of mega bounce that did not happen today. It fell into this selling pressure. What exactly happened, we'll see in the intraday charts. We'll see later, but we have a similar kind of charts and the candlestick that we're seeing for the bank index also. It's in this dodgy, and remember it had made a new all-time high before selling, falling into the selling pressure above the 44k, and managed to close above that as well. And it's a gap up indicating the bullishness again, right? And it's in the expansion mode. Price is expanding and walking on the Bollinger Bands is happening on the bank index, and the consolidation seems to end, and there is a sign of an indication of an upward expansion also seen in the bank Bollinger Bands as seen here on the Nifty. Right? Banknifty is already doing that. Now we had a single priority earlier 2 days back and it bounced back, and now tomorrow we have a Fed rate interest that's coming tomorrow evening, I believe, and also the outcomes would be visible and for reaction in our markets the day after tomorrow. Well, speculation would be there and weekly expiry would be there, so all that creates also confusion. And let's quickly look at the weekly charts before we move the numbers. So basically we have confirmed of a breakout channel from a very long trend line resistance channel. We had multiple weeks of confirmation of that bank index as well. So we have confirmed to be broken out. Now this question is, well, when is the next pullback? So Bank Nifty has run a lot. Nifty had done a 3% nearby pullback, and it is again bounced up from here. That is well and good. But in the case of Nifty, it does not happen and is heading high as if nothing, as if there is no need for that. But there is a wedge, that is ascending wedge that is happening, and then eventually at some point in time there could be a pullback that can come, and that may be ferocious sometimes. So ascending wedge can narrow down to one point and then can. So how long this wedge would continue is only question. Normally 3/4 of this wedge size has to spill out downside. So it's on a daily chart, so no need to worry that much. So pull back, even if the spreads are also may not be that big, but that's a concern that we have to think about. Let's think a little more short term and then try to figure out answers for tomorrow. We had a gap, so today we had a gap up and managed to close not flat, better than flat, 52 points gains, and we finally ended up at dodgy. Banknifty also, that's 100 points plus, and that's 0.23% up from again indecisive dodgy. So basically we had an intraday where we had some amount of volatility that was at the Banknifty, especially. Look at this, it was a gap up and then it was trending downside, but not much, gave up half of what it gained, that's all. Banknifty, it was inverse, it also gave up what it gained after the gap up, and then it was a V-shaped reversal that happened in the banking index. Right? So that's intraday price action, volatility is there, and there is a potential that Nifty can go further up towards the new, beyond the all-time high as well. Probably till very close to 80,000, then it can face resistance and then it can retrace after that. That's a possibility. Here also it can go and hit the 45,000 or 45,500 at least, and then start a reverse journey. So so that's something you have to keep in mind. So it's still bullish. There's no doubt about that. It's gap up and new all-time highs happening every single day. So there is no question. It's above all the moving averages, but you have to be cautious because of several factors that I'll be talking about in the remaining of the session. So resistance support levels can be seen with Nifty at 18,678 and then 778 above that. Right, who's producing highs and then all-time highs and like that. Right. Downside you have 18,500 support will be there, 18,450 support will be there, 18,350 support will be there. Banknifty similarly would have 44,000 and 44,150 the all-time high, so that's only be a resistance on the downs. Above that you have 44,500, which is the rounding number, and downside you have 43,767 will be a support, and then 43,340 will be a support, previous swing low. This is what we are talking about. So these lines which are drawn could be areas of previous resistance and supports. then you would be accordingly facing the sovereign resistance. The selling and the buying pressure can be seen at the zones. That's all we is in our hands. What eventually happens, we don't know, right? So let's look at the volatility. Volatility weeks a school of the volatility bands. Here we are talking about volatility bands. So the volatility, we already saw that there is expansion upside with bullish bias in both, because it's about the median of the Bollinger Band. So no doubt about the Bollinger Band based price prediction. So that should be fine. And momentum is rising up, and so bullish zones also. You can see that it's climbed above 60. But the only thing that we will make a note is peerage divergence that is not confirmed. So that could pull the momentum is falling down and the price is moving up. So there could be a point where it could drag the market down. So that's a bearish divergence that you see here. That's possible. It's in the lower time frame. So even if it brings it down, the targets could be till this 18,300 kind of zones. Right? But it's not confirmed. So not all divergences need to work, but there is a moment divergence that you can clearly visible. That's not the Bank Nifty. Bank Nifty is rocking with solid momentum since long, and Nifty also it's in the bullish zones now, with rising momentum. What about that? Trend indicator had not closed in Nifty yesterday, but today it is closed in Nifty as well. Bank Nifty as well, both. Bank Nifty is rising up. Nifty it is still not great. Strength is there in the trend because it is just crossed over today. But all the trend indicators are now in the bullish zones. DMI positive zones as per the headings indicator. So momentum and trend now favor volatility. Is expanding, price is expanding over the bands and working over the bands and band, especially support resistance levels are good enough. Price pattern is also bullish, no doubt about that, right? But there is some indecisiveness and then some divergence and then some price pattern ascending wedge formation. All this we have to keep in mind always, right? These kind of things has to be, when you're either taking positions and risking more, these things has to be in mind. Now, moving ahead, the VIX has cooled off. It is kind of flat today, 12.88 below 13. It's the lowest of the VIXs that we had seen in recent times. And futures open interest has a build-up of long build-up is formed in both indices. Options open interest before tomorrow's expiry showing a 100-point range, 18,600 and 18,700, because the low volatility, the option riders have highest put rating in 18,600, highest call rating in 18,700, very narrow range. And look at what they have done in Banknifty. 44,000 straddle is what is where the highest put in call rating is. The same point, same strike price for the December 15th expiry tomorrow. So that's again bullish. Volatility is less. Option riders are seeing that it's going to it's not going to crash down. It's likely to close for tomorrow's expiry at least in that range. Now this is dynamic, but it's the closest that you can get to analyze. Put call ratio is bullish, closer to bullish 0.85 and 1.2 is bullish for both indices. So options OI is bullish as well, just like the price action and all the other momentum and trend indicators have been same. Let's study a little bit on the what the industrial sectors has been doing and the heavyweights have been doing. Industrial sectors, all the sectors for close gain, and except the FMCG, which is kind of less than 0.5% down. And IT and metal real, IT metal really all of them had greater than 1% move up, and the other remaining sectors, major sectors that we're talking about they're also close green, except the FMCG, they're all close green, but near to the 0.5% of up. Metal and FMCG are only two sectors which are made in the momentum bullish short term, right? And others are all sides. FMCG sector is having a divergent bullish nature, which indicates that it can bounce up. It's not confirmed though. So we can bet big on metal and FMCG as of now along with the banks. Right? That's what the sector analysis short term is indicating. Heavyweights, it's Reliance, ICICI Bank also closed red today, 0.35, 1.2%. That's a kind of two heavyweight pullbacks that has happened today. Reliance and ICICI Bank, but all other major sectors they are close green. HDFC and the TCS, both the twins, they all moved 1% nearby. In Fiat, small move less than 0.5% and 0.25 on the Kodak Bank. Right? So that's a kind of green moves and red moves are happening. But HDFC twins is only heavyweight that is having a bullish momentum in the short term, others are all in the sideways. And in fact, Kodak is having a bearish momentum also. So not all sectors have come into the bullish zones yet. It's HDFC that is driving the market that we have to understand for the short term. It's a bank that is driving HDFC, the biggest banking stock. Now, institutional participation, if you see, it is another green day for the institutions for both the FIs and DEC have been buying today. 372 crores supplying the cash to the FIs, and then 925 crores of DI buying happened today. So, institutional participation is good, and crude is not spiking up that much, but still less than 76. It's rising up, but then 1% more has happened. But remember, it is after 44% of downfall from the top that has happened, and still in a trend line channel. It is not blocking that yet. It may be in support zone and trying to spike up. But this is good. One of the good things is that it's happening from the commodity sector in favor of our market. Dollar index, if you see, it's kind of falling further, and bearish momentum is there. The dollar index is good. It has finally fallen below the 104 levels, but still not that great. Right. But a good amount of retracement has happened, pullback has happened, but that's not reflecting the USD currency pair. Rupee is still weak, 82.52, but there is some flat, downside move that can be seen. Rupee has gained a little bit today, but still now it is in a bullish momentum, which is a range shift. So it indicates that there is, every chance that it can spike up again. So Rupee weekend dollar side as compared to the dollar is not that great. Right, although the crude cooling off is good, dollar index cooling off is also good, but rupee has to be weakened for markets too. The economy to have the strength, right? And gold is actually risen up 11% up has happened, but it's kind of consolidating and hold that rest, which just climbed and then heading towards before heading towards the next up. But momentum is bullish on the short term at least, right? So that's about the commodities in the global markets that we can analyze, right? So our institutional participation is good. What is at the lower side, and gold is also at the lower side at the support zone. But rupee is in trouble. Gold is also okay. It's rising up, kind of trying to consolidate the bullish market, right? So it's a problem. So Singapore Exchange is flat as of now using indices, showing some green, but you'll have to see both of this pre-market tomorrow after the trading that happened today. There is some even related to the Fed interest rate hikes news that may be coming out today after tomorrow. So there may be speculation on that volatility could be there. And US markets were actually in a descending wedge pattern, and it had taken resistance, but it had short symptoms of reversing on all the indices, S&P 500, Nasdaq, and Dow Jones. But there is some greenery that is shown yesterday and today, probably because of the event that's going to come. So let's keep a close watch. If it's going to reverse from there, or is it going to climb up and break out from that? So keep close watch of the US indices is very much important. And if big falls with crashes happening, we markets will do the same. It's following the same, most likely. If it is slow, then it should be okay. We may be resilient. Major event is that US Fed event is there. Results is coming on December 15th, Thursday, so our Friday. Two stock picks, City Union Bank and Bharat Forge. City Union Bank. It's bank stock. I don't think it's a mid cap. City Union, it's a small cap probably. It's a good bank and seems to be breaking out. It's a rectangle pattern. Weekly charts will give you a better picture on what's happening. So this is a beautiful rounding pattern, cup pattern, whatever you call it. Good risk reward if you keep stop loss below this week's candle low. It's also a consolidation that has happened and the breakout is confirmed after a rectangle pattern has broken out. There's a bearish dive, we are a little bit cautious on that, but yeah, stop losses are always there. It may take some time to move up, but definitely this is good risk reward if we are able to capture that move till 250 nearby zones. City Union Bank long. Next one is Bharat Forge, that's something related to the auto and auto ancillary units manufactured by this company, and is exporting also a lot. It's a range shift. This range shift of the momentum from the bearish zones to the bullish zones is beautifully worked out and is bounced up. It's a cup and handle breakout and slow moving, but there's bearish divergence also there on the weekly basis. You have to be careful on that, but yeah, it could give more on the upside, but it may be positional swings mostly. Keep tight stop losses though at the neckline of the breakout, right? And position size increase as you book your profits and trail. Right, so it's a two big stock picks for the coming days. So having studied a lot on the market, let's wrap up. Today was a GAPUP day and finally ending it in this evening. GAPUP indicate bullishness in this unit indicates that bear fight has happened, and then it is to decide what to do next day. But Bank Index has proved that it has made a new by making a new fresh all-time high once again for the second day consecutively. So that's bullishness. Money demands are expanding. Nifty also shows consolidating yesterday. Small expansion, beginning of expansion is seen. So that is also in favor. So most of the things are in favor of the bulls. Moving average above, price walking on the bands, expansion of the price, and momentum clubbing where the bullish zones again. Nifty, Bank Nifty overall bullishness, US markets green, crude oil for all this, but still for tomorrow. So there is an event. I have a mildly bearish to neutral kind of view because 19,000 areas is not easy to be there to be taken out. It may take a while. It may face resistance, and there is a wedge. There is a nifty bearish indication, bearish divergence that is there. All this make me think that it may take some more time to create the 19,000 more steady fast up. It, especially tomorrow is an event, event speculation, and expiry date also is coming, and yeah, so it all depends mostly on how the US market is going to react in depth tomorrow. So tomorrow it may be mild, neutral, mild bearishness that may be happening. But the range to watch out for tomorrow is 7,500 to 7,800. Otherwise, all 18,300 would be the swing low, and the 19,000 above would be a breakout. Right? 43,000 and 45,000 is also similarly on Banknifty. So that might be mild bearish to neutral view for tomorrow. Next bank day, an event speculative day. So I may be wrong, but at least this analysis of different parameters of the market would have helped you to frame your own view for the next day. If it helped you in some way or the other, please don't forget to subscribe. Please pass it on to maximum people. We have very few subscriptions, and this is the only thing that keeps us motivated. Thanks for watching. Happy trading. Happy learning. Bye bye.